From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 17, 2016. In just a moment, we'll be taking a look at the USDCAD, the US dollar versus the Canadian dollar, for today's trade analysis. But first, I want to recap a couple of the other trade suggestions made this week in the morning analysis videos and the live daily trade room. First off, starting here on the USDCHF, the US dollar versus the Swiss franc, we've been holding a trade for a few days now. The one that is from 99.55, you can see that down here in the trade window, 99.55, currently sitting 56 pips of profit. We've seen a good bit more than that. We already have closed some profit, protecting the profit with protecting the trade with the stop loss. But yesterday I saw it dip down into support again, and I went ahead and added back on. You can see the secondary entry right here at 1.0010, currently sitting about 1 pip of profit, but it's basically up here at this pink shaded area at the very top of the chart. You can see how the market dipped back down to the pink zone. But that's the pattern of the trend. Look at the blue circles. The dip, the rise, the dip, the rise, the dip, the rise, the dip again. So what we're looking for today is the rise again. If we get some positive data at 8:30, we got a slew of US data coming up at 8:30 a.m., about 40 minutes from the recording of this video. Let's hope for some positive news for the U.S. If it's positive, we're going to look for this to take another rise towards the 1.0050-70 level, the yellow shaded area at the top of the chart. Of course, the risk here is that it turns around and goes back down. Poor news sends us back lower. Breaking through the pink zone, it'll close the current trade out, or the most recent trade out, 1.0010, out with a loss. But overall, we'll still be a profit because the previous trade at 99.50 is well within profit. So, and we've already closed some profit on that trade. So that's what I'm doing there on the franc, still working that uptrend and buying the dips into support for the dollar franc. Yesterday we looked at a sell on the euro dollar into the resistance zone, took a sell into the 0.720 or so level. I'm currently still holding that trade. You can see it down there at the bottom of the chart. Currently sitting about 4 pips of profit. We've seen a bit more than that, of course, on the trade. If we go ahead and zoom it in here on the 4-hour time frame, you can see right here, 720. We've seen the market from 720 go down about 45 pips the first run back down. Came back up, got back into it, and 720 is where we are right now. So that's what's happening. Still selling the resistance, similar yet opposite of the dollar franc, selling resistance here on the euro, looking for it to hold the 720, 745 level and go back down. That's been the pattern of the trend. There it is again, the rise, the fall. Not really a rise here, but did stay within the blue zone and then fell. So that's the pattern of the trend. That's what we're looking for. Stay under the blue zone and go back down. So that's the dollar franc and the euro dollar. Let's jump all the way over here to the NZD USD New Zealand dollar. I have been working this currency pair like a crazy man this week, selling it multiple times into the 71, 71.20 level. This is probably the 4th or 5th time I've been in this currency pair. Currently sitting 19 pips of profit on the current trade. You can see that one down here right there. 71.05 is my current entry. Let's go ahead and take it down to the 4-hour time frame. Here it is, the blue shaded area. You've seen multiple challenges. That blue zone has been up into it a few times, looking to target, of course, the purple zone, as we have all week long. We've been talking selling the blue zone, targeting the purple zone. If we can get this to get significantly bearish, if we get some significantly positive news out of the U.S. today, a breakdown of the 70-40, let's call it 7040, bottom of the purple zone, we're likely back down into the 6900s. So that's what we're hoping for today. Significantly positive news. We're already looking to protect this trade already. Now that we're sitting 20 pips of profit or more. So already in profit protection mode, needed to get down towards 70, 60, 40, break through the purple zone. We look for more profit on this currency pair once again for the New Zealand dollar. Okay, let's move on over to the USDCAD. Clearly, first thing that we need to point out is it's an uptrend. Not too hard to see that. Long-term blue trend line, the red trend line, we're in an uptrend. So if we're going to trade the trend, we trade the uptrend. That's really all there is to it. So if we're doing that, we don't want to buy it at the highest high. We want to buy it on dips into support. It provides lower risk and higher potential reward. You buy on a dip. You don't buy it at the highest high. Remember, buy low, sell high. So let's go ahead and zoom it in here one time on the daily time frame. Again, you can see The market has dipped back down over the past couple of days. We've seen a rise in oil prices. That's given this some headway back lower again. Rising oil means that this is going to go back down again. And that's what we've seen over the past few days. Oil's had a pretty good run over the past few days. If oil starts to pull back a little bit, go back down a little bit, that's going to give us some positive movement for this to go higher. Of course, we do at 8:30 a.m. again, just a short time from the recording of this video. Have some news out of Canada, some medium impact news, higher impact news out of the U.S., CPI, Philly Fed, unemployment claims, all that coming up at 8:30. If it's positive movement for the U.S. dollar, we're going to look for this to bounce off this blue shaded area, the red trend line, and start going back up. Let's take a peek at that blue shaded area again. Zooming in, look back here, resistance. We know as technical traders, we know with some confidence that historical resistance helps us identify future support, and that's what we're looking at right now. Yesterday and so far today have found support above the 1.3400 level. Of course, we have that significant double zero price level too at 1.3400 at the bottom of the blue shaded area. So support is developing here. That's good news. Developing support. We just need now the momentum to shift, and that's really what it's all about. Right now we have bearish momentum. We need the momentum to shift into the side of the buyers for the USDCAD. So that's what we're looking at. Support, we got some Fibonacci here, 618 of the most recent little leg here from this low to this high. Puts the 618 just under the blue zone, 50%, 34.25 at the top of the blue zone. So all in all, we're looking at this blue shaded area to be our support today, and the risk is pretty easy. The risk is it breaks underneath here and goes lower. Stop losses should be underneath, likely somewhere around 1.3385 or so, 80 would give you a pretty decent stop loss. You just don't want to stay in a long if it breaks through there. If we get poor data out of the U.S., oil starts to rise rapidly, all of that's going to send us back down again for the USCAD. So we want to pay attention to that area as we go through our day today, looking for it to turn back higher once again. Let's take it on down to the 4-hour time frame, and I think some other things that we can look for here, especially now that we've had this little bit of a free fall back down and holding support down here into the blue shaded area. What we can look for now is a new Forex Black Book signal. If you're not familiar with the Forex Black Book is this green bar at the very bottom of my chart. That shows us a bullish bias, a bullish momentum. That's good news. That gives us something to look for. Next thing we'll look for is momentum to shift and a green arrow. I can give you a couple of green arrows here on the chart. One of them happened when the trend bar was red. That was all the way down here at the very bottom of the red trend line. You see the green arrow here? One happened right here in the middle of the trend line. And that happened when the market shifted momentum again and started going back up. So it's that green arrow that indicates on the 4-hour time frame a shift in momentum in the direction of the longer term trend, which is green down here at the very bottom. So we need a green arrow. If we can get a green arrow, that's going to indicate a shift in momentum. We're going to look for this to start turning back higher, maybe challenge the highest highs, and maybe even make a new high here for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.